Okay, so good evening, everyone, and welcome to the next session on this corporate and economic laws to be taken by me. Last time I had taken one session, and today I'll be taking the next session that is on winding up. So winding up is a very relevantly new topic which has been introduced in our course. New topic in the sense it's not that it has been introduced only last 1 year, but new in the sense that the law was there, but then it was notified only about a year or 2 years back. So therefore relatively new for all of us. And in comparison to what has been there in our previous law, that is Company Law 1956, and with the introduction of IBC, winding up has got a little bit less value in comparison to what is happening in the world of IBC. But a vast topic, a lot of sections to be understood in this particular topic, and therefore we'll straight away start with this concept. So there are two parts of this particular course, the chapter part, winding up from 271 to 303 and from 324, 325 to 358. What about the missing sections? The missing section have been now shifted to IBC. So there are two parts. The first part is purely talking about the process, the initial admission into winding up, and then the appointment of liquidator and what will liquidator do, the powers of liquidator. And then the second part, that is the third part basically, we'll talk about the recovery of assets and the distribution of assets along with penal and the restitutory provisions. But more important is the initial sections about instances where winding up can be admitted or initiated, and then the powers of liquidator and what liquidator has to do, and thereafter the recovery and the distribution part. I think these are the two areas where we need to focus upon. So I will be covering the sections which are important, not covering the sections which are not relevant, or maybe we are just purely theoretical, which does not require any explanation. Now, when we talk of winding up, I think the normal concept which we all understand in terms of winding up is the company is closing down, and that's the natural outcome of this word. So, in overall sense, if we consider both the law, the company law, as well as the IBC Act, winding up involves a scenario where we compulsorily wind up the company because of certain instances. The second reason is when the company is under stress, they are not able to pay the debt. So therefore, winding up may be started or admitted by the NCLT. And the third, the company on its own, they want to initiate winding up process because they feel that now the operations are closed down and I don't have anything to do. So let's close down the business. So that's again a winding up. So there are different scenarios. So all the scenarios are covered into different laws. One is company law and the other is the IBC part. So I assume that if the IBC has been covered, well and good. So it will be easy for you to understand what is the difference. If it has not been covered, anyway, we are not going to touch upon the IBC provisions. I'll just touch upon at a particular section, that's all. Otherwise, not at all a prerequisite or requirement that we should be aware of the IBC proceedings. Then we talk about the appointment of the compilation of the assets and the process of specific transaction, as I said, the recovery and the distribution part. And then we have the winding up rules, the forms which are required to be filled when we are complying with the winding up sections. Then there are winding up rules which have been framed. So those rules are separate. We are not going to cover the rules part because it is purely procedural and it more or less refers to different types of forms which are required to be filled in. In terms of exams, so coverage would be around 4 to 6 marks, which is, I think, sufficient enough for you to concentrate on this particular topic. And most of the questions are of direct nature. We don't find any much case laws decided by the court so far. There are few cases which are going under winding up in different parts of the country, but still not much of complications which are being reported. So mostly direct questions, maybe in the form of case scenario, but then that case scenario will be totally based on the section part. No such practical case study could be coming because of decided case laws. So that's a good news, I think, for all of us as student. We need to focus on those topics where you don't have the practical case laws being asked, because that is quite difficult. So if it is directly out of the question, the section, I think we should concentrate on these kind of chapters. So let's try to unwind and understand what is winding up all about. So winding up is defined under 294. It is winding up under Companies Act and liquidation under IBC. So that is legally defined that winding up means under both the act. So what are the conditions under this act? Leave aside the IBC part. So what are the conditions? 271. Let us start with 271. That when can we start the process of winding up? So the company may be wound up by tribunal. So first thing is, it cannot do on its own. While in IBC, there was a scenario that there's a scenario where the company can wind up on its own, but here it is only by an order of tribunal that winding up can happen. Only by an order of tribunal. Great. So that is very nice that the order of tribunal is required to wind up. Now, what are the scenarios? The first is we need to have a special resolution. Great. Special resolution. So we have S, a special resolution. On just an equitable ground, we feel that the NCLT feels that it is just and equitable that the company should close down. So that is another reason. So the third is where you have defaulted in filing of financial statement or annual return for immediately 5 consecutive financial years. 5 consecutive financial years. So there is default in financial statement. The company has acted against the interest of the sovereignty and the integrity of India. Very natural when you feel that you are doing certain activities which is against the interest of the country, then by default you are taken towards winding up. It's I. And an application by the registrar or any other person authorized by the central government. When, let's say, the registrar or the central government thinks that it is required to be wound up, maybe by an order of the court, during investigations. Let's say you can recall that during investigations under 213, NCLT may give order to the government that you need to take this step. So based on that or based on any other finding, the government may come up and file an application to the tribunal. So that is the registrar. So this is the short form which you can create. If I put it in proper words, it is FIR, FIR. Or in simple words, if you put it in Hindi, फिर से FIR SE, but FIR SE. So 5 conditions. Now the question comes in, what is just and equitable? Here, now remember, there is by a special resolution. That means the members can do it. SR, that means members can do it. Tribunal on its own on just and equitable ground. Defaulted in financial statements. So there is no such provision of creditor coming up and asking the tribunal to wind up the company. So when can this happen? When can the tribunal or creditor go for winding up? Remember, for creditor to wind up the company, we have to go to the NCL, IBC provisions. We have to refer to the IBC provisions. So for creditor, remember, there is no such law out here. And we need to go to the IBC. Now, what is just and equitable? Just and equitable is where we have operation and mismanagement between the two parties. There's a deadlock between the operation, between the two directors or two parties or different shareholders, how to run the business. And the company may be indulging in unlawful activities. The company is a bubble company. That means the purpose is something else while the company has been formed. It is just a front end while something else is going behind the company. Or it is one of the shell companies. You must have heard about the shell companies, which are just created, but actually the owners, the operations are being done by someone else. The owners are someone else, and something else is cooking up in the company. Loss of substratum. That means the purpose for which the business was, the company was formed, that purpose is not there in existence. So today we don't have the objective of the business being continued. So therefore the NCLT, the due court feels that the company should be wound up. So on just an equitable ground, it is not defined, remember. So there are instances which you have to create to find it is just an equitable to wind up the company. So these are a few examples of just an equitable situation. Remember, this is important because this is I've been asked in the exams that what is just an equitable. So we need to write down a few examples of just an equitable situation. If you have any questions, I think there are people, students who have logged in. Just let me check. Yeah, Mr. Boni Jose, good evening. He has logged in. If somebody else has logged in, just let me know. And now the question comes in, 1:271, when can an application be submitted? The question comes in, who will submit that petition? Who will submit that application? If there is a default in filing of annual return, who will do that? So there are people who have been defined under this particular section 272, which will tell you that these are the people who will file an application at NCLT. So the people is the company itself. The company may come and file a petition in case the special resolution is passed, or they find it is just an equitable that the company should be wound up. So in that case, they may come up. Any contributory or contributories. Now, this is an important word which we have to understand, define, and note down because this is frequently asked in the exams. The definition of contributory, who are contributory. We'll see it in detail later on. All or any of the persons specified above. So 1 and 2 combined can come together and do that. The registrar, in 210 investigation or 212 by SFIO, there may be a situation where the registrar is appointed by the government to file an application, or the authorized person by central government, any person, it may be the registrar or it may be the RD who may be authorized to file that. And in case falling under subclause B of 271, then by central government or state government. So remember, if it is purely under clause B, then clause B is just an equitable, then it is central government or state government. Now, in case of contributory, who is a contributory? Just let me define who is a contributory. Contributory in simple words is the member of the company. Contributory in simple words is the member of the company. Remember, he is known as the contributory. Now, in common parlance, contributory is someone who has to contribute. So, why would a person who is having his shares fully paid up would be contributory? So by definition, it has been mentioned that a person who holds fully paid up shares is also known as a contributory. Though he may not have any liability, but at least he has got the right. So in simple meaning, friends, remember, when the company is admitted in or an application is filed for winding up, the members are now termed as contributory. That is a simple definition. Simple understanding, not the definition, simple understanding. Contributories are nobody else except the members. So a petition by contributory can be filed even if he is holder of fully paid up shares, even if there is no assets in the company, or it may not have the surplus assets left after the distribution part to be distributed to the contributories. So even in those cases, the contributory is allowed to file for the petition part. Now question comes in about predecessor period will be counted or not. Suppose you are the member as of today. You had purchased the shares from a previous owner, whether that particular period which was where the shares were held by some other person, whether that will be counted or not. So these are, certain things which has to be answered. So petition by contributory will only be filed if shares in respect of which he is a contributor or some of them were either originally allotted to him or have been held by him and registered in his name for at least 6 months during the 18 months immediately. So that means he should have been the holder of those shares for at least 6 months during the last 18 months. So that is why the question comes in whether the predecessor period will be counted or not. So still clarifications are invited that whether that predecessor period is counted for that or not. So, but this is the basic condition that he should hold the shares for at least 6 months. Registrar can file for all clauses except A, which is the SR by the company. So obviously in that case, it is the company which is going to file. So except for that provision, the registrar can file under all the clauses. And prior permission is required from the central government, and also opportunity to be heard to the company has to be given before the registrar files an application for winding up. So this is petition by registrar. Important point is this one. Prior permission is required. Remember, when the registrar files, prior permission and opportunity to be heard to be given. Now, in case of a company, see, remember 272 is very important because there are questions which are asked because it contains specific situations, specific conditions that who can present when, That is why this section is important. 271 is under what situation, but 272 talks about who can present when. So a company can present only if an SR is passed. Good. It is only admitted if accompanied by SOA. So, statement of affairs has to be published or submitted in such form, so that form is given in winding up rules, that in what form that SOA has to be given. So SOA, we all understand, is nothing but the statement of affairs of the company that is in the balance sheet or the balance sheet of presented in the form of assets and liabilities. So when you file a petition, the copy has to be given to the registrar within 60 days. And if he has to submit any views, then the registrar may submit the views within 60 days of the receipt of such petition. So that is 272, friends. So remember 272, the exam questions are contributory. When can a contributory file a petition? This is the question. Second question is when can a registrar file a petition? And third is when can a company file a petition? So once the petition is filed, what are the orders which are given by tribunal? So let us understand the types of order which are given by tribunal. When the petition is admitted, it is heard. When the petition is submitted, it is heard. And the tribunal will hear on the petition, any objections on the petition. And after hearing, the final order is issued by the tribunal. The orders may be dismiss the petition with or without cost. Now, what does with or without cost means? That means they can, in the order, specify that a cost of 50,000, 1 lakh, 5 lakh has to be submitted by the applicant. So normally it does not happen except in rare cases. Make any interim order as it thinks fit. Very important. Till the time it gives a final winding up order or dismiss the order, it may give an interim order. Why? Why it will give an interim order? Maybe on the application of the applicant or by the registrar. The registrar files that please give an interim order of initiating winding up till the final winding up order is issued, or appoint a liquidator, because they feel that the company management are selling of the asset, disposing of the asset, or if the business is continued, it may be harmful in the interest of the country. So therefore, please give an interim order till you give a final order. So that is why the provision of interim order is there. So till that final winding up order is there, if the interim order is released, initiating winding up proceedings against the company, they may appoint a liquidator who is known as a provisional liquidator. He will be a provisional liquidator till the final winding up order is issued. Or they can make an order for winding up, final order for winding up. So these are the four steps which the tribunal can make: either dispose, either admit, or interim order appointing a provisional liquidator. Now, this has to be given within 90 days from the date of presentation of petition, which may not happen because it may take time for hearing of the petition. So these are again all, directions which are given. They may not be mandatory at times. Good. So 3 sections which we have understood, friends: 271, 272, 273. Who can file? Sorry. Situations under which winding up petition can be filed. Who can file? And what are the orders which can come out of the tribunal? So prima facie, what I've seen that there are high chances of question being asked from these first 3 sections, 271 to 273. Yes, so 90 days is for giving an order. Normally, we assume this 90 days will be for giving the final order. Final order. So before appointing a liquidator, they will give a reasonable opportunity to the company to make any representations, and the company may come and make the representations. Not at all a problem. There may be a situation on the ground that the assets of the company have been mortgaged for an amount equal to an excess of those assets, or that the company has no assets. That means in a scenario where the bank comes in and says that, so the assets have been mortgaged to us, why are you ordering up, winding up, giving a winding up order? Our amount is at risk. We have given the loan, the charge is created. Or even if there is a scenario, there are no assets of the company. When there are no assets of the company, what is the use of giving up winding up order? When you know there's nothing to be realized and there's nothing to be distributed, what is the utility of giving up a winding up order? So even in these scenario, even the assets are mortgaged or the company does not have any assets, tribunal will not refuse in making the winding up order only because of this reason. Right? You got this point? Now remember, statement of affairs. Now this statement of affairs is to be filed by whom? Remember, under 272 we have seen, if the company is filing a petition, then along with the petition they have to submit a statement of affairs. But let's say if the company is not filing the petition, but somebody else is filing the statement, and the tribunal is of the opinion that yes, this is a case of winding up, then under this scenario, tribunal shall make an order to direct the company to file its objection along with statement of affairs within 30 days of the order. So anyhow, finally, a statement of affair has to be presented. So statement of affairs is a compulsory document which has to be presented whether petition is filed by the company or by someone else. Now, what if the petition is not being, statement of affairs is not presented, SOA is not presented? So the company fails to file the statement of affairs. Then the right to oppose the petition is forfeited from the company. So because what has happened, remember the petition has been filed by some other person. The direction is given to the company that please file an objection along with the statement of affairs. The company does not file a statement of affairs but comes up with objection. Then it is not allowed to raise the objection because it does not file the statement of affairs. Along with that, punishment. Along with that, punishment will be given to such directors and officers for non-compliance. So friends, the nature of questions which are asked from this particular section from 271 to 274 are very simple and direct. You don't need to refer to any other material except our ICI material. Pick up that section, understand, break that section, refer to our presentation, the class, and that is all. Just pick up the content and write down the answer. The directors and the other officers of the company within a period of 30 days of such order submit at the cost of the company the books of account of the company completed and audited up to the date of order to such liquidator in the manner specified by the tribunal if the order of winding up is under 273(1)(d). So under a specific situation of 273(1)(d), then they have to get the accounts audited, prepared, and submitted to the liquidator. So again, not to be learned or understood. It's purely a procedural part. Contravention will result in penalty. Fine. So 273 to 274 is all about preparation of accounts. That's the crux. Statement of affairs. And if they don't comply it, then the penal provisions get attracted. Now coming to this important section on the appointment of the liquidator. The appointment of the liquidator, friends. Now we have seen there are two words which are coming in, two words. One is provisional liquidator and second is the final liquidator. So provisional, when there is an interim order, a provisional liquidator may be appointed. And if the final order is given, the final liquidator is appointed. So in general, if you talk about, there is a provisional liquidator, there is a company liquidator who is nothing but the final liquidator. And there is one more liquidator, that is official liquidator, which were in existence before this 2013 Act came in. And before the concept of insolvency professional came in, it was more the official liquidator who was doing the job. But under now the current scenario, it is the insolvency professional who is appointed as a liquidator. So when and petition is submitted, when the final winding up order is pending, and if they think that there is a fraud being committed against the interest of the country, the court may appoint a provisional liquidator out of the panel maintained by them, given to them by IBC. Same principle as what you must have studied during IBC. If not, a panel is sent by IBBI, that is the Insolvency Bankruptcy Board of India, to all the NCLTs. From that panel, a liquidator is chosen and appointed as a provisional liquidator. Now, when the final order is given, if a provisional liquidator is appointed, can he be appointed as the final liquidator or the company liquidator? Here the word is not final liquidator. Here the word is company liquidator. So can the provisional liquidator be appointed as a company liquidator? The answer is yes. The answer is yes. What are the additional things which the tribunal can pass? Till the time the company liquidator is appointed, they can restrict the powers of the provisional liquidator, or they may provide for all such powers to the company liquidator. And the fees may be decided by the court based on the task, the experience, qualification of such liquidator, and the size of the company. So powers of the provisional liquidator. So the exam question will be, who will appoint a provisional liquidator? First. Second, when will a provisional liquidator be appointed? Third, can the provisional liquidator be the company liquidator? Fourth, from where this provisional liquidator will be appointed? Fifth, what are the powers of provisional liquidator? Then the next question will come in, friends. Next question will come in whether we can remove the liquidator or not. Whether we can remove the liquidator or not. So yes, the answer is the liquidator can be removed. Again, a direct question, 5 marks, 4 marks. Very simple reasons, not at all a complicated one. Straight away picking from the section. Misconduct, fraud or misfeasance, when there is a professional incompetency, when you are unable to act as provisional liquidator, that means when you are not able to perform the functions as desired, or you express your inability to act as provisional liquidator, conflict of interest or lack of independence during the term of his appointment, where you are found out that you are related or somehow indirectly related with the company. So in that case, you are removed. So grounds of removal, very clear: misconduct, fraud, incompetent, you express your inability, or there's a conflict of interest. Very general reason, right? Obviously, if he's removed, then the work will be transferred to the new liquidator. If he's being removed, opportunity has to be given to the liquidator. And if there is a loss, the loss has to be recovered from the liquidator. This is again a procedural part. I'm not taking it up. Now, winding up committee. This is again very important. Now, remember, if you have studied IBC, there is a COC, the Committee of Creditors. So here, there is a winding up committee. The winding up committee will consist of official liquidator attached to the tribunal. So here is the role of the official liquidator. As I said, official liquidator nowadays have a very limited role, but here they are part of the winding up committee. Nominee of secured creditor and any professional appointed by tribunal, example, valuer, CA, legal expert. So this is the constitution. And this constitution has to be submitted to the tribunal within 3 weeks from the order of winding up, that this committee has been formed. This committee has been formed. Again, the purpose of winding up committee is that the company liquidator will be the convener of the winding up committee, and he will present monthly reports to tribunal along with the minutes of meeting of winding up committee till dissolution. That means he has to call for the meeting, and he will present monthly reports on the performance or the purpose for this winding up committee has been created and what are the actions taken by him. So the task of winding up committee would be taking over the assets. Obviously, it will be done by the liquidator, but again, under the supervision of winding up committee, examining the statement of affairs, recovery of any property or other assets of the company, including benefits derived thereof from, review of all the audit reports, realization of assets, compromise settlement of claims, payment of dividend, and finalization of list of creditors and contributories. These are the major job of the winding up committee. So finally, everything when it is over, a report will be prepared on dissolution by the liquidator, which will be approved by the winding up committee, and then it will be submitted to the NCLT. So again, we expect a direct question. The role of winding up committee. The role of winding up committee. This is to be defined. Constitution and the role of winding up committee, 6-mark question. Constitution and the role of winding up committee. 6-mark question could be asked in the exam. If you have any questions, please raise your point. No. This is the important part, friends. This is the important part. Report of the liquidator. One of the major section of winding up is 281, report of the liquidator. Once the order is done, within 60 days, we'll submit to the tribunal a report. A report basically, remember, it is to cover all the assets and the liabilities of the company. So it is giving each and every detail of the assets and the liabilities of the company. For example, they will give you the details of the asset, including their location, value, cash in hand, in bank, negotiable in securities, if any, held by the company. And for that, if a valuer report has to be taken, a valuation report will be taken. Along with that, the liability part, including contingent liability. Details of liability, including contingent liability, debts due to the company, guarantees, if any, expended by the company, list of contributories, remember shareholders, and if any amount to be paid by them, list of trademarks, intangible assets, all contracts, joint ventures, holding subsidiary, legal cases. So it's basically what the balance sheet to be redrafted or presented with further details. Balance sheet to be presented with further details. And very important, two angles. One was purely on the balance sheet part, more on the assets, liabilities, including everything. The other aspect, the company liquidator shall include in his report the manner in which the company was promoted or formed, and whether in his opinion any fraud has been committed by any person in its promotion or formation or by any officer of the company. And if the company is running, he will make a report on the viability of the business of the company. Now that gives a very big responsibility on the liquidator to check whether the business is viable or not. You know, chartered accountant being entrusted with the responsibility of preparing a report on the viability of the business. We can understand on financial matters, but technically in terms of technology. So therefore, he would need support of a lot of other people if he has to make this report. The technical feasibility report, which is normally given when the business is started. But here it is being prepared when we are trying to close down the business, along with the fraud report. So two things he has to complete within 60 days. Quite a tough job. So within 60 days, you have to do everything, prepare the balance sheet, form an opinion on the fraud part, understand the viability of the business, form the winding up committee, file an application to the court, do a lot of jobs. Once the report is presented, 281 is the report of the liquidator. Again, exam question. Contents of the report of the liquidator. exam question, contents of the report of the liquidator. Again, very important. Now, based on the report, what can tribunal do? What will the tribunal do? That's an important angle again. So based on the report, the tribunal can order a fixed time limit for completion of entire proceedings. Or the tribunal can order for sale of the company as a going concern or its assets or part thereof. Very important. They may give a direction of the sale of the company as a going concern. That means they feel that the company is running. There's a viability. So therefore, we should sell the company as a going concern, and that will be given by the tribunal. And if there is a report of the fraud by the liquidator, straight away investigation under 210. Or they may say that please file a criminal complaint. So again, 282 is very important from exam perspective. Directions given by tribunal based on the liquidator report. Time limit or sale or fraud, 3 angles. Time limit, sale or fraud. These are 3 coverage areas. Other than that, it is a normal report. So tribunal has to decide on these 3 parameters if they have to take a decision. Now, when you see the overall perspective, friends, you need to recall what is there in 281, what is there in 282, what will happen in 210, and then if there is an investigation under 210, it will culminate into a report under 223, and therefore the actions under 224. So the final action would be under 224. The final thing which will come out is out of 224. So this is how you have to look from the holistic purpose. So it's not only about NCLT giving an order of investigation. No, the picture does not end there. It keeps on moving till that particular chapter of 210, the investigation is completed. Based on the report of the investigating officer in 223, these certain actions which have been taken under 224. So normally, these thought process should come under your mind, friends. These are the questions which should come under your mind. That's why when we are referring to 210, is there any outcome of 210? Yes, there is some outcome of 210. Then further, if they think that there is a need for revising the time limit within which the entire proceedings have to be completed and the company needs to be dissolved, then the tribunal may take that respective decision on its own. This is again simple. So this is the final flow: 281 report, 282 report considered, and 283 is all about what the tribunal has ordered. In this whole process, the promoter, the director, they have to cooperate with the company liquidator. So section 284 talks about the yeah, Mr. Jose, the whole issue is that in winding up, there are no such real life examples so far. That is the whole problem. In starting, I had mentioned that relatively a new section, and therefore you don't expect any real life scenarios in this. And this being a very, few of these sections are very process oriented. So that is why it's more of understanding the process, the step. But wherever required, I would come up with the scenario and give you further insight on that. Like for just an equitable, I gave you the example, what could be the possible reason of just an equitable. That is not given in the section. That has to be, understood. So apart from that, appointment of liquidator, the job of liquidator, the job of winding up its committee, it's very standard. So the promoter, the director have to support the liquidator, and if they don't do it, then they are liable for certain actions. Now this is again important, 285. So from exam perspective, from 271, 272, 273, 275, 278, 281, and 285. These are important sections from exam perspective. Now, after the winding up order is given, in 281, they have to prepare a report. They means since the liquidator has to prepare a report. And he has to settle a list of contributories. So by definition, who are contributory? They are those people who are liable to contribute to the assets of the company in the case of winding up. That means when the company is being wound up, the members are termed as contributory and they will contribute to the assets. Now, contribute to the assets in the sense, that members will only contribute when they have only paid part amount towards the shares. If they are fully paid up, probably they don't need to contribute to the assets of the company. But are fully paid up shareholders also defined as contributory? The answer is yes. Fully paid up shareholders are also contributory, though they are not required to contribute, but still they will have the right of the contributories. Now, what is the right of the contributory? The right of the contributory is that they are going to receive the amount when the assets are being distributed. Then they have right to receive the amount after the, the waterfall mechanism. So contributory are two people, partly paid up shareholders, fully paid up shareholders. By definition 226, you have to write down this definition. So as I said, holder of fully paid up shares without liability will have the right to contribute, but have the right as contributory. So the process, the flow will be winding up order is given, liquidator is appointed, preliminary report is submitted, and in that preliminary report, the liquidator will present the list, and the list will be settled, the list of contributories. And the list of contributories will include two lists, very important. That is why 285 is very important, friends. Why 285 is important? Because it says that there will be two lists, list A and list B. List A is of those members who are currently the shareholders, the current members. And list B are members who were members before that 1 year. Sorry, less than 1 year, not before that, less than 1 year. That means there might be certain members, shareholders, who were holding the shares, but they have transferred the shares, they have sold the shares. So currently, as on the date of winding up, they are not the shareholders, but there are new shareholders. So they would come under present members, and the people who had transferred the shares in last 1 year, they will come on list B. List B. So they are termed as past members, present members, past members. Two lists will be prepared of contributories. The NCLT may dispense of that list if they feel that the calls are not required. That means you don't need to call money from those contributories. This will happen when the asset is more than the liabilities. So then we don't need to call for the amount from the contributories. And they can say that please include the past members to contribute to the debts and the liabilities of the company. That means they can tell that yes, the past members have to contribute because the current members are not able to contribute in full, or even after their contribution, the liabilities cannot be adjusted. So therefore, you have to contribute to that extent. So condition when past members are liable, exam question, frequently asked. Frequently asked. Conditions when past members are liable. Please note it down. 285. Who are contributories? Who will prepare the list of contributories? Are past members contributories? And when past members are liable? First, past member is liable only when present members are unable to pay. Past member ceases to be a member greater than 1 year. They are liable only when the present members are unable to pay. Liable only to the unpaid amount if limited by shares. Liable only to the unpaid guarantee if limited by guarantee. So very logical. Only liable when the current members are not able to pay. And remember, he is not liable for any debts after he ceases to be a member. So that means if any debt has been raised after he has ceased to be a member, he will not be liable for that amount. So any debt which was in existence when he was a member, then only he is liable. So the first condition which we have to see is whether he has to be included in the past member name or not, the past member list or not. If he is included, then for what amount are we calling the money? Whether that amount is being called for the debt which was in existence when he was a member or not. If yes, he will be liable to pay. Liable only to the extent of the unpaid amount. Liable only to be paid to the extent of the unpaid amount. Example, company went into liquidation. The liquidator finds that the assets are less than the liabilities. He therefore calls on the contributors, including the past member as per list B. The past members object to such request and say that it is not as per the provisions of the code. Whether the contention of the past members are tenable. So the answer is the past members cannot deny their liability. So they are liable as per the conditions mentioned in the 285. Second, in an example, Mr. Khurana received a notice to deposit 30,000 as his liability towards his contribution for the shares from the liquidator of the company, which was ordered by NCLT on 14/6/2019. Mr. Khurana ceased to be a member of the company from 13/11/2018. Now, we have to go what? 1 year before. Past members are liable only to the extent of last 1 year. If there is before 1 year, then they are not liable. So before 1 year, that means we can go till 14/6/2018. That means 13/11/2018 falls under this period of 1 year. Therefore, Mr. Khurana is liable for contributing as per the order or the notice of the liquidator. So remember, if he was member 1 year before, he is not liable. In last 1 year, if he was a member, he is liable. That is the financial year calculation or number of days of calculation. A was a member on 31/3/2021 and he had paid 5 rupees on the face value of 10. Final call was made to the member and his shares were forfeited and the shares were issued to new shareholder. Discuss the various situations. The new shareholder paid 5 rupees. New shareholder paid 3 rupees. So if the new shareholder had paid 5 rupees, then the liability towards that share is over. It is fully paid up now. But if he has paid only 3 rupees, that means there is still a liability of 2 rupees. So when the new shareholder was unable to pay the total amount towards his contribution, then the balance amount could be called from the past member, but only that past member who were members till 1/4/2020, not before that. Is this clear, friends? Is this calculation of contributory, the period, and when can they be called? Mr. Jose, I hope this practical example will clarify the section 285. So this is 285 for all of you friends. Then there is another committee known as advisory committee. So one was the committee that is winding up committee. Then there is advisory committee. Now the purpose of advisory committee to advise the company liquidator. On what? And it is basically to give the report to tribunal as the tribunal may direct. So there may be chances that the functions of the winding up committee and the advisory committee may overlap. But more important is the structure or the constitution of the advisory committee. Remember, the winding up committee was to be formed by the official liquidator plus the nominee of the secured creditor plus any person appointed by the tribunal. Here, it is the liquidator, then meeting of the contributory and creditors will be convened by the company liquidator within 30 days of winding up order. And out of the meeting, there will be people who will be acting as a member of the advisory committee. That means it will consist of contributory and creditors. Now, creditors, it is not being classified as secured or operational. That means meeting will be called of all the creditors, and from that we will pick up, and they will be nominated as the member of the advisory committee. And the list will be submitted to the tribunal. Overall, there will be 12 members. It can be members from the contributories, creditors, or any other directed by the tribunal. Chairperson shall be the liquidator. So the advisory committee will have certain rights with respect to the inspection of books, document, assets, properties of the company at reasonable time. And they may give necessary instructions to the liquidator, and if he wants to follow it as per the law, he may do so. And if there is any conflict, they can sit down and then approach the NCLT for further directions. So, winding up committee has been formed for 13 members. So, as per law, it is not allowed. So, as per law, we need to form only of 12 members. Along with that, responsibility has been casted on the liquidator to submit report at the end of each quarter with respect to the progress of the company, whatever the progress has been made. So this is more of a procedural issue. Now remember again, friends, 271, 272, 273, 275, and thereafter 278, 281, 285. Important sections. Practical scenario 285. Practical scenario question 285. Following persons have the right to inspect the report submitted by the company liquidator and take copies thereof or extracts thereof from on payment of the prescribed fees. A creditor of the company, contributor of the company, promoters and the officers of the company. So, who has the right to inspect the report submitted by the liquidator and take copies thereof? Obviously, the promoters and the officers don't have the right. So it is the creditor of the company and the contributor of the company. So 1 and 2. Winding up means winding up under this act, dissolution of the company, liquidation under IBBI. So winding up means 1 and 3. We have discussed that. It means winding up as well as liquidation. Which of the below mentioned are not the functions of winding up committee? Remember, here we are talking about winding up committee, not the advisory committee. Taking over the assets, sale of assets, examination of state of affairs. So I think every job is of the winding up committee. So none of the above. None of the above. What is the jurisdiction of tribunal? So jurisdiction is obviously very wide. So anything which is in relation to winding up the company, I think that is included. So not going to jurisdiction because that is not within our scope. Not under the particular this chapter. Tribunal has made a winding up order appointed as company liquidator. Such liquidator shall dash within from the order to submit a report to tribunal. So this is talking about the liquidator's report, section 281, 60 days. What circumstances company may be wound up on a petition under section 271 by the tribunal? So SR, we know, against the interest, we know, default in filing for 5 years, any one of the above, simple one. All meetings of winding up committee as advisory committee shall be chaired by the company liquidator. This is nothing. Which are the following matters the company liquidator shall include in his report? Shall include in his report. The manner in which the company was promoted or formed, the viability of the business or the steps in which the business are necessary for maximizing the value of the assets of the company. So both 1 and 2. You can include both 1 and 2. Whether any remedies available to creditors agreed by decision of official liquidator? Yes, why not? They may file an appeal to tribunal. That is always there. So that option is always there. So this is another exam question. Another exam question. Powers and duties of company liquidator. Till now, we have not seen these powers. It was more on the formation of winding up committee, more on the formation of advisory committee, more on the duty of submission of the liquidator's report, preparing list of contributories, and so on. Now, let us see his exclusive powers and duties. Exclusive, clearly defined. Till now, it was more on the responsibility indirectly. Now, let us see the exclusive duties which have been defined. So in general, we can segregate the powers into 3 categories, which has to be very natural because now is what the owner. So as owner, you have to run the business, so he should have business power. As owner, he should be involved in, complying with the law. So therefore, he should have statutory powers. And third, because it is a winding up process, so he should have some recovery powers. He needs to sell the assets, recover the amount. So therefore, he should have recovery powers also. So for carrying on the business, he will carry on the business. He will do all the acts to execute in the name and the behalf of the company, all deeds, receipt and other documents, and sell the movable and immovable properties and actionable claims of the company by public auction or private contract. And he has got the power to transfer such property to any person. To sell the whole of undertaking, again the selling part. To raise any money, that means for business power. To institute and to defend any suit, prosecution or the legal proceedings, that means statutory powers. To invite and settle claims of creditors, again statutory powers. To inspect the records, statutory powers. To prove rank and claim in the insolvency of any contributory for any balance against his state, that means he can file an application for for his claim if an insolvency is being initiated against any contributory. That means again going to IBC, individual insolvency. Again, statutory powers to accept, endorse any negotiable instrument, to take out in his official name letters of administration, to obtain any professional assistance. So these are all general things, again, not all technical part, but you have to learn it. So I'm not going into details. Just learn the powers segregated into 3 parts, and then just learn this section, 290, powers and duties of the liquidator. This was all about the powers part. Now, the liquidator may appoint with the sanction of tribunal. This is important. Without the sanction of tribunal, I cannot appoint a chartered accountant, company secretary, or any of the professional. And after he is appointed, he will be disclosing his relationship with the company. So 291 again gives the power to the liquidator to appoint any person. Now, if that blanket power has been given to the liquidator, whether it should be controlled or not, the answer is yes, it should be controlled. So what is the method of control? So first method is by the advisory committee. See, winding up committee is morely looking on the sale of assets and the distribution part. But on a day-to-day operations, it is the advisory committee which comes into picture. So one is by the advisory committee and the resolution of the creditors or the contributors at any general meeting. Now remember, the creditors and contributors can meet separately and then they can resolve and accordingly give their resolution to the liquidator. So that is the method of control. So if the powers are given, there are ways to control those powers. So if any direction is given by the creditors, resolution has been passed. So if there is a conflict between by the advisory committee or by the resolution of the creditors committee, then the resolution of the creditors or contributors will override the directions given by the advisory committee, because the advisory committee is consisting of only 12 members and that too representative. Now here it is more of the majority who are giving the resolution. Example on the conflict part could be the auction method. Now, when we talk of the auction method, friends, practically, there are different ways of auctioning. It could be through public auction, private auction, sale in part, sale as a going concern, sale in piecemeal basis. So there might be certain difference of opinion. If that has to be resolved, maybe that can be resolved by advisory committee or by the creditors. And then if there's a difference of opinion, the resolution will be having an overriding effect. Now, the creditors meeting can be called by the company liquidator apart from the regular advisory committee meeting. He may summon meetings of the creditors or contributories for understanding their wish. And he shall, one is may, that is on his own, but he has to, if there's a resolution passed by a general meeting of creditors and contributories called separately by themselves, then he has to call the meeting. Or whenever requested in writing to do so by not less than 1/10 in the value of creditors or contributories. So in that case, the liquidator has to summon a meeting. And then whatever is decided in the meeting, that has to be presented and acted upon. Now, this is again relevant from exam perspective. Accounts and audit. Accounts and audit. It has been asked in one or two attempts, one attempt, I think. Accounts and audit. As a liquidator, we all know that we have to prepare the accounts because when we have taken over, the accounts may not be updated. We have taken over during the mid period of the financial year. So how do we prepare for the accounts and get the books audited? So the provision says that, one second. That is to prepare an account of receipt and payment not less than twice a year and is to make it presented to the tribunal. And when the accounts are audited, he has to present it to every creditor and contributor. And if required, NCLT may give directions whenever it feels like and the manner in which it feels like. And thereafter, he has to submit that report to the NCLT. So when the accounts are audited, he has to submit that report to the liquidator, to the tribunal, and to the registrar. So the final outcome is, first is he has to submit a receipt and payment not less than twice a year. That is first thing which he has to do. Second, once the accounts are audited, he has to submit it to every creditor and the contributory. Along with that, he has to submit it to the NCLT, and a copy has to be delivered to the registrar. And this particular audited account statement shall be open to inspection by any creditor or contributor or person interested. After that, if NCLT gives further direction on the accounts to be audited in such manner as it thinks fit, then they have to get the accounts audited. So that is 293 for books and audit, friends. So this you have to remember. First, recipient payment, audited balance sheet to be submitted where, and audited statement audited to be done in case NCLT desires. The tribunal has ordered a winding up of Abhishek Private Limited. The creditors of the company brings to the notice of tribunal that though the company has been ordered for winding up, but no information has been submitted by the liquidator. Explain as per the provisions of the Act what remedy do the creditors have. So the remedy is very simple. They can file an application to the NCLT that the liquidator may be removed. That the liquidator may be removed as per section 276 because he has not acted in professional competency. That is the action they can take. Yes, along with this, final few powers are there for with the NCLT for summoning, giving a summon to any officer of the company, person known, any person whom the tribunal thinks to be capable of giving information, suspected to be indebted to the company, suspected to have any position or any property or the books or papers of the company. Then if a summon is given, then that person has to come and he can be examined on oath. This is simple, I think, nothing further to be discussed. Yes, if you see section 300, report by liquidator under section 281, then order under section 282, which may call for further investigation. Based on the report of liquidator, that person may be called in person by the tribunal, summon may be issued, and he may be examined, and if found guilty, necessary action will be taken, or if not found guilty, he may be relieved. So that means the crux here is 281, friends. Remember, why I'm trying to highlight this, we need to understand that why these sections 300, from where this power or from where the tribunal will come into picture, call a person. So probably when the report under 281 is prepared, the fraudulent nature is given, the reasons of fraud have been given, identified, the fraudulent transaction have been identified, and maybe the names of the parties has been disclosed. So based on that, the tribunal will summon the related person, related people, and accordingly action will be taken. So it is very important when we come in practice, actually, the flow should be clear from where I should link one section to another section. That is the difference between the theoretical part and the practical part, friends. Okay, this is again not at all. Apart from that, there is a possibility of arrest of the person. If any time before or after passing a winding of order, tribunal is satisfied a person is a contributory or is having a property and is about to leave India, or is about to remove or conceal of any of his property, then that person may be detained and arrested. And once everything is done, there is a dissolution of the company as per 302. That will be an application made to the NCLT for dissolution, and based on that application, the NCLT will decide that the company may be dissolved, and respectively order will be given, and order has to be filed with ROC. So this is the basic process of the winding up. What we have understood is the process part, but we have not taken into consideration now how the amount will be collected, how the amount will be distributed, what is the criteria of distribution, what are the technicalities involved. So we'll understand that after this break, and then we'll switch on to the recovery and distribution part. Recovery and distribution part. Right. So friends, we take a short break and start after this break. move ahead and talk about the world of winding up in terms of collection and distribution. This is the important part, friends, where I believe that the probability of asking question is more. So here we have to look into 4 aspects, 6 sections, 6 important sections, which requires a bit of explanation, and there are few practical questions also which we need to understand. So therefore, please note down the concept. It's not about concept, it's all about understanding the flow and then how to solve those practical questions. And there'll be few terms which have to be understood. Few new terms which may come in, that has to be understood. So let us start, friends. 6 sections, 326, 327 talks about order of payment. Order of payment, that how payment has to be done. See, normal course, what we have studied, liquidator will take over the assets. Winding up committee will supervise the whole process. Thereafter, decisions have to be taken along with the advisory committee, and he will carry on the business or whatever he may sell the assets. Great. So the assets are there. He has listed on all the assets. The liabilities part, the assets will be sold off. So when the assets are be sold off, the payment has to be made. So how the payment has to be made? So let us understand the first part, that is known as the overriding preferential payment. Very important. OPP. Instead of OTT, we have OPP, overriding preferential payment. 326. Then it says that you have to make the payment for cost of the winding up. If you have studied IBC 53, 53 is again a waterfall mechanism of making the payment, where the first payment is the cost of winding up or the liquidation of the CIRP. But here it is something else where we have to make an overriding preferential payment. Thereafter, we have to make the payment for the cost of winding up. I believe that under this scenario, nothing much is left once you make the overriding preferential payment. Anyhow, if there's the law which we have to follow, then we will follow. And then there are the preferential payment over other payments. So what are those OPP payment which we have to understand? Then we have the debentures secured by floating charge. Then we have the unsecured creditors. And then finally, we have the remaining, the shareholders, the contributories, which are, we have understood. So let us see what are overriding preferential payment. Overriding preferential payment. The first payment is the workman dues. And workman dues, to what extent? That is also important. That is what we need to understand. And the second part is where a secured creditor has realized a secured asset, so much of the debts due to such secured creditors as could not be realized by him, or the amount of workman portion in his security, whichever is less, pari passu with workman dues. So debts which are paid in priority are workman dues and amount to be paid to secured creditors, which is not being realized by him, and the amount of the workman portion in his security, if any, if payable under any law. If there is any value of workman portion in his security, security means the the asset which has been secured or given to the secured creditor, whichever is less pari passu with the workman dues. So this amount and this amount will be paid in equal rank. Though this is a bit complicated to be calculated. It is basically the amount which is not being realized by the secured creditor, or the workman due portion, which is the value of workman due portion, which is included in the value of the security, whichever is less, that amount and the workman dues will be paid in pari passu. Workman dues are payable for a period of 2 years. And they'll be paid within 30 days of the sale of asset. Remember, the rule is that workman dues and the amount which is due to the secured creditor will be paid in equal rank. Very simple, the meaning of this is the amount which is due to the secured creditor is to be paid in equal rank. But the amount which is due to the workman it will be paid in priority to all other debts, including debts due to secured creditors. So remember, the first thing which we have to pay is the workman dues due for the last 2 years. Workman dues due for the last 2 years. And thereafter, whatever amount is left, that will be paid to workmen and secured creditors in equal proportion. They will be ranked equally. And what are workmen dues? Workmen dues will include wages, salary, all accrued holiday remuneration, all sums due to any workman from the Provident Fund, Pension Fund, or any amount which is to be paid under Workmen's Compensation Act, basically because of the insurance or disability of any workman. So very simple, friends. If we take an example, if 200 lakhs is the value of secured assets, workman dues outstanding for less than 2 years is 25 lakhs, more than 2 years is 20 lakhs, secured creditor 250 lakhs, then first out of 200 minus 25. This is the first payment. Balance is 175. Now this 175 will not be paid to secured creditor, but they will be paid to workmen dues and secured creditor in pari passu. They will be standing in equal rank and they will be paid in proportion. They will be paid in proportion. That means the calculation will be 20. Total amount due is 270 to both of them. 20 plus 250. Sorry, my pen is giving some problem. Just 1 second. Right, so 20 divided by 270. We know the proportion calculation. So 20 divided by 270 into 175. and 250 divided by 270 into 175. That will be paid to workmen and secured creditor. This is how the distribution will be made. Another example. The value of secured creditor is 1 lakh. The total amount of workmen dues is 1 lakh. The amount of debts due from the company to secured creditor is 3 lakh. What is the amount payable assuming workmen dues are more than 2 years? They are more than 2 years. So simple, first priority of payment, 0. The next priority of payment will be equally distributed. So 75 and 25. Distributed in the ratio of 1 and 3. In the ratio of 1 and 3. Then we come to preferential payment. Before the preferential payment, remember there is the winding up cost. The winding up cost has to be paid. Thereafter, there will be the preferential payment. So one is overriding preferential payment and the second is the preferential payment. So what is the order of preferential payment? First is government dues, which is payable in less than 12 months. Employee salary from a relevant date. And then investigation expenses under 213 and 216. They will all fall under equal rank. They'll all fall under equal rank. So government dues, employee salary from the relevant date, investigation expenses. Now, what is that relevant date? Payable for a period of 12 months immediately before the relevant date. Now, what is the relevant date? Relevant date is passing of winding up order or appointment of liquidator, whichever is later. Passing of winding up order or appointment of liquidator, whichever is, yes. Date of appointment of a provisional liquidator or date of winding up order, whichever is later. So salary for last 12 months. Remember, it is salary. Now, the salary also is calculated in a particular manner. So all wages, salary payable for time or piecework and salary earned or wholly in part by way of commission for any employee in respect of services rendered to the company and due for a period not exceeding 4 months within the 12 months before the relevant date. And this will include all accrued holiday, all contribution, any compensation, any employee amount due from the provident fund, gratuity fund, accrued holidays, anything. But the amount which is eligible is only to the extent of 4 months within the last 12 months. Now, why this 12 months, 4 months? Simple logic, friends. There may be people who might have left the organization within the last 12 months. So that is why a period of 12 months is taken, but only 4 months salary will be given. So maybe as of today, he's not working, but he was working 8 months before. So to give justice, his amount is also calculated. So that is the employee salary. Any government dues which is payable in less than 12 months. Any investigation expenses covered under 213 or 216. they will all have priority over the claims of the holders of debentures under any floating charge. Remember, that is why it is termed as preferential payment. Otherwise, debenture holders are secured. They should be given a priority, but that is not the scenario out here. Example, dues of worker, unsecured loan, trade creditors, secured creditor. The above amount was received as claim. The amount realized is 80 lakhs from the sale of asset. Calculate the amount to be paid to each claimant as per Companies Act. Now here, because there is no such clear-cut instructions about what is the due to the worker relates to, is it less than 2 years or more than 2 years? The first thing what we have to consider is less than 2 years or more than 2 years. Assuming less than 2 years, so the first amount 80 minus 25. Then comes the secured creditors, which is 75, fully being utilized, no amount is left, so nothing will be paid to the remaining people. All amount gone to 0. Now, just a thought, friends, just a thought to give an overall perspective. Just do consider or give it a thought. What will happen if I have to receive a money from a company which is being wound up and I don't receive the money? Or suppose if I have to make a payment, and I don't make a full payment to the company and the balance amount is written back, what is going to happen with that amount which is not paid in full? What is going to happen, the tax treatment of that amount which is not paid in full? For example, the amount of loan, haircut the bank takes, or the haircut the company takes. Let's say in case of insolvency, the company is a going concern and there's a haircut on the creditor's part, rupees 100 creditors only paid till 50. What is going to happen with that 50 for the tax part? That's a thought process. You have to think over it and see if there are any provisions under the Income Tax Act. Further examples. 30,000 due to an employee for 8 months out of last 12 months. How much will be paid? Remember, we have to pay only for 4 months. So this for 8 months, for 4 months, it should be 15,000. So does that mean that the balance 15,000 will be waived off, not to be paid? No, friends. That will be taken in other creditors. It is due, but not taken as a priority payment. The claim will be there of 30,000, but 15,000 will be paid in priority. The balance will be taken in other creditors. That will be paid after the payment has been made to the debenture holders, unsecured creditors, and thereafter. Amount of 1,50,000 towards gratuity payment, the full amount will be paid. if assuming it is belonging to that 4 month. So this is, friends, overriding preferential payment and preferential payment. Now we come to another term known as fraudulent preference. Now what is fraudulent preference? Here the word fraudulent preference means there are certain transactions which are fraudulent in nature. Now 26 and 27 we're talking about distribution part. Now we will be talking about recovery part. Recovery from what? We have already sold the assets. That is recovery. That is one angle. But here recovery on certain kind of assets or transactions which are fraudulent in nature, which have been given fraudulently a preference to certain people. That is known as fraudulent preference. Similar transactions or provisions are there in IBC also. In exam, there could be a possible question on difference of distribution of payment in IBC and winding up. In IBC and winding up. Now, which are the transactions which are regarded as fraudulent preference? To whom the fraudulent preference is given? To one of the creditors of the company. Fraudulent preference is given. See, preference will always be given to creditors normally. Or to a surety or guarantor for any of the debts or other liabilities of the company. To a guarantor who has given a guarantee on our behalf for our liabilities. To that person, we have given a particular preference. What kind of preference have been given? Where we have transferred a property, delivered any goods, we have made a payment, and the time period of such transaction is 6 months before making the application. And the final outcome of this particular preferential transaction will be tribunal will order the restoration of such transaction. Now, what kind of example could be? So let's say there's a creditor and I have transferred one of the properties to that creditor. Which property must have been, let's say, mortgaged to the bank, but then I've transferred that property. So I've given a preference. I have made a payment to the creditor, which should not have been done. Basically, that payment should have been done to the bank, but I made the payment to the creditor. I've transferred a property to the guarantor. I've delivered goods suddenly to the creditor. Instead of to the debtor, I have delivered goods to the creditor to settle their payments. So these are examples of certain preferential transactions, which are not in ordinary course of business, which have been done 6 months prior to the making of application of winding up. And if you come to know of these transactions, then restoration of transactions will take place. Example, Horizontal Limited was ordered to be wound up on a petition filed on 10th February. The official liquidator who has taken control of the assets and other records has noticed that the managing director has transferred certain properties belonging to the company to one of its creditors, Vertical Private Limited, in which his son was interested. Now, there is no such criteria whether son was interested or not. That is additional facts. Otherwise, this is not relevant to any of the transaction. This was causing huge monetary loss to the company. The sale took place on 15 September 2018. Remember what we have to see. Any transactions which are preferential in nature, which involves transfer of property to any of the creditors, which is not an ordinary course of business, and has been done 6 months prior to the date of application. So from here, we'll take 6 months back and see whether it falls under 6 months. The answer is yes. So therefore, this is known as a fraudulent preference. He can take an action, file an application to tribunal, and tribunal can order for restoration. Modern technology was incurring huge losses and its financial position was bad. The company created a legal mortgage on some of its immoral properties in favor of a bank on 1st September 2018, in the hope that by keeping good faith with the bank, it could get further advances from the bank and the same could be utilized to revive the company. Some creditors filed winding up petition in the court on 15 January. The court passed an order of winding up on 1st August. Answer the following with reference to provision of the Companies Act. Whether this is a fraudulent preference, the answer is first, whether it has been done 6 months or not. Now remember, 6 months from which date, that is important, friends. It is the date of application of winding up, not order passing. So here we have to say 15 February, not this. This is irrelevant. So before 6 months, yes, it is falling before 6 months, but was it a fraudulent preference? The answer is no, because this was done in good faith that the bank will giving me further advances. So again, as I said, it should be in ordinary course of business. So there was no preference which was given to the bank. Therefore, that cannot be termed as a fraudulent preference. Now, transfers which are accepted, which are not treated as void, as I said, any transfer of property which are made in the ordinary course of business, and any transfer of property, movable or delivery goods in favor of a purchaser or incumbents in good faith and for valuable consideration. So anything which is normal is normal. You cannot treat it as a fraudulent preference. But what could be certain transactions which are not normal, which looks in the ordinary course of business? No, they do not look in ordinary course of business. Selling X, but selling capital goods. You are selling a particular product, but to a particular debtor you have sold capital goods. So that is not in ordinary course of business. Undervalued transactions, transactions with related party. These are all transactions which have to be reviewed and looked into to understand whether these are void transfer or not, whether they are being done in good faith or not. So what is to be done if it is void? That means undervalued, not in good faith. Again, an application is to be filed and amount to be recovered as per the NCLT order. So these are all part of fraudulent preference. Now the flow of transaction for fraudulent preference or void transaction. Example, so then again I go back to the flow. Loan outstanding as on 31st July 2020, 20 lakhs. Property transferred 18 lakhs on 1st March 2020. Company admitted for winding up 31st July 2020. Whether it is fraudulent preference, assuming yes, it is a fraudulent preference given to a particular party to whom it should not have been given. Can it be void? So it is a fraudulent preference. Fraudulent preference does not mean that we can reverse the transaction until it is a void transaction. So the transaction is void because it has been given at certain price, which it should not have been done. What is the implication of C331? So the implication is that A fraudulent preference is given to a creditor, so it is invalid. Now, liable to the company as security, as surety. And liable to the value of mortgage created, whatever the case may be. Of what amount? Out of the value of interest or amount as on the date of financial fraudulent preference, whichever is lower. So the amount outstanding was 20 lakhs and the property transferred is of 18 lakhs. So the fraudulent preference will be of what amount, whether 20 lakhs or 18 lakhs? The answer is 18 lakhs. So that is what the section 331 says that. It says that the value of interest, so value of interest is 18 lakhs. The amount as on date of fraudulent preference, the amount as on date of fraudulent preference was 20 lakhs. Whichever is lower, which we have to take the lower amount. So I'll take 18 lakhs. So that 18 lakhs will be treated as a liability to the company as surety, or will treat that mortgage has been created from that 18 lakhs amount. And that can be called back or restored by filing an application with CEL. So this is how the fraudulent preference and transaction being void clubbed together to restore the original state. Effect of floating charge. Effect of floating charge. Now, what is floating charge? Remember, friends, floating charge. See, one is a specific charge, which is on a particular asset. Normally, term loans are given as specific charge. Floating charge is something which is generally on all the assets. Generally on all the assets. That is a floating charge. The objective is to prevent an insolvent company not to create a charge on any past debt or for money which has not come. That is the objective, to prevent such transaction. Let us understand what is a floating charge. So what is the action which the company has taken? They have created a floating charge on the assets of the company. Time period, 12 months. Remember, for fraudulent preference, 6 months. Fraudulent preference, 6 months. For floating charge, 12 months. This floating charge will be valid until it's proved that it is not valid. And along with that amount, interest of 5% per annum is notified. That will be allowed. That means to that extent the claim can be done. That means a floating charge has been created, loan must be given, and the loan can carry an interest of 5% per annum. That is a simple transaction. That means it is a valid transaction. But if that charge has been created for an old loan, it is void. Again, as I said, if a new loan has been given, fund has come in, plus 5% interest, it is allowed, not a problem. And at the time of creating the charge, if it was solvent, whether it was given for old loan or new loan, everything is valid. So it is void only if it is given for an existing loan and the company was insolvent. Why there is a need of creating additional charge on the old loan? Not at all required. So therefore, that transaction will be treated as a void transaction. So void transactions are those transactions which are not done in good faith. Not done in good faith. Provided again new loan and solvent. These are two conditions. Example. A company created a floating charge on the current assets in favor of a bank to secure a current account, which was in a debit of 5 lakhs, and also to secure further working capital limit provided by the bank. The charge created on the 1st January was duly registered. The company advanced 10 lakhs subsequent to the creation of charge. The company has gone into voluntary liquidation passed pursuant to a resolution passed on 1st September. Examine the validity of floating charge. But there is no fraudulent preference. So it has been clearly specified. There is no fraudulent preference. There is no transfer of asset. So to the extent it is there for 10 lakhs, it is allowed because the bank has given 10 lakhs. But for already a loan of 5 lakhs, a charge is being created. And we are creating a further charge on that 5 lakhs, it should not be allowed. So to the extent of 5 lakhs, it is void. And to the extent of 10 lakhs, it is correct. Time period is again 1 year. So it is well within the time limit. So not at all a problem. Step 1, first take old loan. Step 2, new loan. It should not be old loan. Step 3, solvent. See these conditions. Old loan, 5 lakhs. New, 10. No information about solvent. If it was solvent, both valid. Because no information given, assuming it is insolvent, this not valid, this is valid. I hope it is clear, friends. Another important concept. Another important concept. That is disclaimer of onerous property. Disclaimer of onerous property. Now, what is onerous property? Very important concept. These are all new terms, friends, for all of you, which have to be understood. Two parts which we have to understand: how to disclaim, and second is the power of NCLT with respect to those onerous property. Examples: land of any tenure burdened with onerous covenants, shares or stock in companies, any other property which is not sellable, not readily sellable, thereof being bound either to performance of onerous act or the payment of any sum or money, unprofitable. Now, does this example actually gives you the clarity about onerous property? To some extent, yes, but not fully at times. So onerous property example, the asset value is 50 lakhs. But when you have to sell that 50 lakh asset, probably you have to incur an expenditure of 75 lakhs to sell that 50 lakh. Why do I need to incur? That property may have been burdened with certain kind of liability. Some dues are there, or some structure is there for which we have to remove those structure before I can sell that. Therefore, the cost of removal is more than the value of the asset. That can be termed as onerous properties. Something which is unprofitable. For selling an asset, I have to incur more expenditure. Onerous property. So what should a liquidator do with such kind of onerous property? The ideal way is to disclaim it. Opposite of claim is disclaim. Normally, the process is of claiming all the assets lying across the country. You go there, claim, this is my property, my property. Here, what you are trying to do, opposite of claim, disclaim that property. Why? Because it is onerous in nature, burdened with certain kind of covenants, agreements, consequences, liabilities. So for those kind of assets, certain procedure has been laid down by NCLT, law. It says that liquidator will apply for leave of disclaimer by NCLT within 12 months after commencement or extended period. So they can disclaim the property within 12 months and apply to NCLT that, yes, I want to disclaim this property. Good. This is a simple process. Anybody can do it. Everybody can do it. Now, what may happen that the person who is holding such property or it knows about such property he may apply to the company liquidator and ask him whether you want to claim or disclaim. To claim or disclaim. And within 28 days, he needs to apply to disclaim. If he intends to, he will have to apply for disclaim. And if he fails to, later on, he cannot disclaim. Now, this is a very big problem for the company liquidator, where you have taken over the company and suddenly somebody comes and tells you that this is a property, let me know whether you want to disclaim or claim it. And within 28 days, he comes and stands in front of you. And after that, within 28 days, I have to give my consent whether I want to claim or disclaim. And if I fail to communicate, then I cannot disclaim it later on. So this is catching the liquidator on the wrong foot. So example, liability is 3 crores, asset value is 2 crores, winding up date 29/11/2020. Notice issued by party 15/12/2020. Within 30 days, he has issued the notice. And no reply by the liquidator, but he applies for disclaimer on 15th March. The answer is that he cannot apply for disclaimer because he is not replied within 30 days, 28 days to the notice issued by the party. Therefore, he loses his right for disclaimer, and therefore he has to claim that property. So very tricky situation for the liquidator, friends. but that is how this law tells him to act. So this is the concept of onerous property, friends. So remember few concepts. Fraudulent preference, very important. Transactions which are not done in good faith, related party, transactions done with undervalued amount. So they are void transactions, and if they are void, they can be recalled and restored. Then onerous property. These are certain examples of recovery of asset or disclaiming this. Recovery is basically void transactions, a floating charge, and fraudulent preference. Onerous property is altogether a different nature of transaction. DOP, disclaimer of onerous property. DOP. So 5 to 6 sections which are very important under the third part of winding up. Overriding preferential payment, the mode of payment, how it is to be done. 2 things. And thereafter, these 3 terms which are important. Any doubts, any question so far? Good. Our floating charge is clear. Now, what may happen, the company is running, you have made certain contracts with a particular person, and the company now goes into liquidation, winding up. It may happen because of winding up nature, I may cancel the contract, the liquidator. Then what could be the possible scenario for the damages which are incurred by that person who has entered into the contract? So what will happen? An application will be made by that person to the NCLT for rescinding the cancelling the contract on such term as to payment by or to either party of damages for the non-performance of the contract, or the otherwise as the tribunal considers just and proper, whatever is the order. Either it will give you certain directions for payment of damages or whatever is just and proper. And any damages payable under the order to any such person may be proved by him as a debt in the winding up. Thereafter, whatever is due to that person, that will be treated as a debt. Now, it is not mentioned what type of debt, secured or unsecured. And the tribunal can further order on a property that, see, one was on the contract part, other on the property. That property can be vested or delivered to the person who is entitled to. Or if it is not delivered, then by way of compensation for such liability as aforesaid. So for any property where you think that you are interested and the company is holding that property where you have the right, you have to apply to tribunal and get the requisite order. So that is also coming under onerous properties. So prima facie, friends, these were the important provisions for winding up. The third part. Now coming to the smaller miscellaneous provisions under winding up. which are again more procedure oriented. The previous ones were a bit technical, so I gave the explanation, solved few questions. But here it is more process oriented. Again, 4 to 6 mark question can directly come. If you have sufficient time in hand and you can very well cover every topic, then I would definitely suggest do cover this topic. But again, defining on the priority list, if you give your order of preference, this should come down below. So the offenses are of various nature, committed by officers or of the companies, where there is no disclosure of asset, no delivery of property, no delivery of books or papers, no delivery of information, displaying fictitious losses, expenses, false representation, then you are subject to certain penalty. And that penalty should not be less than 3 years imprisonment, up to 5 years, and with a fine not less than 1 lakh, but to 3 lakhs. So that is the punishment which will be applicable to the person who is involved in all these things. So I have given the 8 blocks just to remember, and this is all the details of those 8 blocks. Certain things which are of standard nature, where a liquidator, whenever the company is under winding up, for every document which is issued by that liquidator, that should mention that the company is in liquidation. It should by default mention that the company is under liquidation. This is again important section. Important section. Company liquidation, dividend and undistributed asset account. So imagine a scenario which is again very rare. I believe it can never come in a case of winding up, where the assets which are distributed are more than the liabilities. Therefore, the surplus amount is being distributed to the shareholders. And even the list of contributories are not traceable. That means people are not traceable. What will happen to that undistributed asset account? Or the creditor is not traceable. So that is left lying with the liquidator. That means imagine the life of liquidator. He has to keep on performing till how many years? That is a tough job of the liquidator. So any dividends which is payable to any creditor, dividend does not mean the dividend which is we have understood as a dividend paid out of profits, but it is purely meaning the amount which is paid to creditor, which had remained unpaid for 6 months, or the assets refundable to any contributory which have remained undistributed for 6 months. The liquidator shall deposit into separate account known to as company liquidation dividend and undistributed account. Such a big account name. I wonder why such big names are given. So when will that be done? On the date of liquidation, on the dissolution, sorry. That amount will be transferred to this particular account. This amount has to be done on this date. And thereafter, he will submit a statement to the registrar. That this much amount is due, not paid, and this is the last address of that person. Now, suppose you as a person were entitled to receive that amount, but you have not received the amount because of ABCD reasons. And then subsequently you come to know that, okay, this company has gone into winding up, the amount has been distributed and I was entitled to do so, receive that amount, but I have not got that amount. So how do I do that? And the company is being dissolved. So thereafter, you have to approach to the registrar for the payment. And a registrar, if settled, if thinks that it is entitled to do so, he will approve that and the payment will be made within 60 days. So what will happen to that account which is being maintained at the bank and where there's no such claimant? So what is going to happen that after 15 years, that amount will be transferred to the central government. Any liquidator who is retaining any amount which should have been paid to this account, pay interest to the rate of 12% and also penalty. Big problem for the liquidator, right? A Limited is getting wound up by the tribunal as a sum of 45 lakh which was deposited in this account. Mr. P was given the receipt of the same. Mr. A applied to registrar on 1st October 2019 claiming 12 lakh. After verifying the correctness of the claim, the same was settled on 12th November 2019. Balance amount remained unclaimed for 15 years and was transferred to general revenue account. It was noted a sum of 6 lakh was retained by Mr. P, which should have been deposited into this account. Hence, interest was levied by Mr. P. State the correctness of the process compliance in given situation. So 15%, which is wrong, it should be 12%. That's the answer. Simple answer of 12%. Mr. T is appointed as official liquidator. The company has been declared a wound up on 6/2020. Rupees 2,50,000 representing the amount unpaid to creditors were not deposited into company liquidation dividend account until 30/9/2020 by Mr. T. What actions can be taken against Mr. T in the above mentioned situation? So final date was 2020 and unpaid amount till 30th September. Remember, any person who wants to claim or if he has to deposit, it will be deposited only after 6 months. And now only 3 months have passed in, so there is no default by Mr. T, so no action can be taken. 6 months had not elapsed in the above situation, so therefore no action can be taken. So all the returns of filing, delivering of documents will be casted upon the liquidator to do so. And if he fails to do so, then whatever the cost is will be borne. It will be borne by the liquidator. So we have seen there is a meeting to be called for the creditors or contributories to ascertain their wishes. We have seen in 292, 293 to, the control over the powers of the liquidator. Remember, 290 is the power of liquidator. Thereafter, we have seen there's a advisory committee. Along with the advisory committee, the creditors or the contributories can call for their own general meeting. And further, the liquidator on his own can call a meeting of the creditors or contributories to ascertain their wishes. And remember, if there is an application by 1/10 of the number, he has to call such meeting. So 354 talks about the way the meeting has to be called in. And the process of calling the meeting, conducting the meeting, and submitting the result to the tribunal. So this is how, friends, the whole winding up process will continue. And the final end result is distribution of assets to each of the creditors as per the order of preference. If not distributed, the amount to be transferred to a respective account within a particular time frame. No amount to be retained by the liquidator. If retained, 12% interest has to be given. If somebody has to claim that amount, he has to apply to the ROC for claiming that amount. If not claimed within 15 years, transferred to the central government. Penal provisions, 336, about 8 to 9 actions where penal provisions would apply to the officer of the company. So 336, remember, and then whatever we have discussed, the technical terms. So 285, 281, 290, 294 regarding books of an accounts, thereafter 300, and the initial sections of winding up, which were very relevant. So if you have any questions, friends, you can please raise your questions. I hope 4 to 6 marks and giving a sufficient time of 3 to 4 hours to this particular subject would be more than enough, covering the important aspects. So if there are no further questions, I would conclude today's class. Yes, Mr. Jose, if you are there, or Mr. Sudhir. No? No, right? So thank you, everyone, and see you in my next class with the next topic. And if possible, I'll try to cover the questions on this topic also, few MCQ-based questions, if something is left. And then I'll cover the miscellaneous provisions in the last class. Thank you and see you.